Welcome back into the live stream today. We're going to be jumping into Ethereum, and has the merge actually run into a little bit of a push? And also, where's Bitcoin going? We'll dive into all that good stuff, take some technical analysis, dice it up with Gareth Soloway. It's going to be a fun one. Welcome back into it. My name is Paul Barron. This is TechPath. All right, so joining me today, of course, is Mr. Gareth Soloway, and he's always wanted on our channel. He always gets in, kind of bringing in the good news and the bad news that usually comes in it. So Gareth, nice to have you back into the show.
It's always great to be back, Paul. Thank you.
Hey Gareth, before we get started, I want to thank our sponsors. This, of course, being Bybit. Bybit, of course, if you guys are not in their ETH trading fiesta, jump into it. It's a really interesting competition. They've also done some cool stuff, which is some special rewards that they're going to be giving away some ETH. So all you have to do is join our link. You'll be able to get a chance at up to $2,000 in rewards and prizes coming over from Bybit. We'll be announcing that at the end of the month. So of course, it's all those have used our special link below. So make sure and check that out. All right, Gareth, I want to get into a couple of things here with you. And that is, first and foremost, is the stock volatility that we're seeing right now ahead of the Fed's next rate hike. Do you feel, or I should say, what is your current sentiment around where the potential of the S&P and some of the major stocks that really could kind of fly into the face of what's happening here on the FOMC meeting on Wednesday?
Yeah, so I think that right now the market has been pricing in that 75 basis point rate hike. And I think that's why we saw that volatility. Initially, the markets were kind of around that 50 basis points. Then we saw the CPI data last week, and the market really reacted and said, oh boy, now it's definitely 75. So that's what the market's pricing in right now. I think what the important thing to recognize is that 75 is what the market's pricing in, but what the market will move on Wednesday is going to be what the Fed guides going forward. Are they going to say, okay, we're going to stay the course and raise another 75 at the next meeting? Or are they going to say, hey, we might be a little bit more dovish here. Maybe we're going to start to wait and see what the outcome economically is going to be.
Yeah, I want to drill into that with you because looking at the outset here, I think, early on, if you could look back at where we were from the last time we heard Powell talk was over in Wyoming, and understanding where it was at that time, I think a lot of people started to look at it as a much more aggressive position. And of course, when you look at the performance, this is Charlie Biello, 2022 returns. I mean, this of course is all of the major tech stocks, and you can kind of see the carnage that's happening right there just from the 2022 run right now that we're looking at. And in many cases, we went back and looked at some of these performers all the way back into a year over. And even in the year over, many of these stocks were really in some dire straits. With this kind of loss roster that we're looking at, I mean, here you had Square at 60% down, Meta at negative 57, PayPal, 50% down, Google 29% down, Tesla down 13. With those being in that position right now, and you and I have talked about this before, Q3 is coming up. We're going to have Q4 possibly seeing some pretty soft numbers and maybe some correction even further into the markets. How far do you think the stock market can take in terms of more cuts? Where do you think we're going to see at this toward the end of the year?
Yeah, so I do think there's a little bit more downside, but with the downside comes amazing opportunity for swing traders, for kind of shorter term position traders. And so one thing I'd love to show is the chart here of Meta. And one of the levels I've isolated down, there's a huge support level around this 133, 132, and all the way up to about 135. And you can see, again, pivot point here, pivot point right here, all the way back here. So as you see, Meta's had this massive decline. Number one, that gets my attention. I say, okay, Meta may be on sale. Maybe the kind of the emotion is getting too crazy on it. And then I look for those technical levels. So I think the point being here is that, again, who knows where we are December 31st, but if in the next 2 weeks we were to slam into this level on Meta, I would absolutely be saying, pick some up, buy a little bit, maybe not a ton, but just dip the toe in the water. And I think there's a lot of tech stocks like this out there that have just been crushed. I mean, your list was very accurate. I mean, AMD, NVIDIA, I mean, all of these type names. In fact, let me go to NVIDIA here real quick. And look at NVIDIA's level. It's not that far away from epic support where this consolidation sideways action was going. That's going to be huge support at 120 bucks. So it's maybe a little bit more downside. And then I think you start to see some really interesting opportunities into kind of maybe the October, November period.
Yeah, well, a good thing on Meta, we've been watching this one pretty closely, and it's tied to what's happening in the VR space. Obviously, October 11th, they're doing their big event, which will be doing the reveal of the new headset, which a lot of people will take as this could be the gateway. Because if you look back at October 11th last year, that was essentially the announcement of when Meta pivoted and looked to kind of change their whole cycle. So I think you're dead on it. And full disclosure, I have been buying Meta. We've been kind of doing some little bit of trades, but I think you're right. I think if we see that 130 mark, 135 is kind of really the window that I'm looking for. Those could be some winners. And I'm kind of curious, your thought on Twitter right now, down 4%. And what we've been seeing is a lot of pressure from media really pushing back on Twitter, TikTok, etc. Do you think we see some more pain on the Twitter front?
Yeah, so I think with Twitter, the real key is going to be how does this Elon Musk fiasco all trade out, right? I mean, I think that's where we are now. Just looking at the chart alone and kind of ignoring the nonsense out there, one of the things that strikes me is a trend line here. I mean, look at this trend line sloping down. So if you're someone who wants to be bullish on Twitter, you need to see a break of this trend line, because what you'll see here is every time it hits the trend line, it gets pounded to the downside.
Right.
And then it goes back and pounded again. So until that breaks, be very, very careful. But if it does break, then you have a trend line break, a trend break, and you actually could see some upside. And just to talk briefly about NVIDIA, and we talked about Meta before, you notice how as these stocks come into these levels, these technical levels, it's almost a trigger that could tell us that we could be looking at that coinciding with a Fed pivot. And so again, that's not telling us when that's going to happen, but when those levels hit, why would technology bounce, guys? Ask yourself that question. Why would tech have a big bounce? The answer is the dollar would have to be coming in. Interest rates would be coming in. How would that happen? Fed pivot.
Yeah, for sure. You look at this point right here, biggest Fed rate hike in 40 years. This is something I think that a lot of people are kind of putting into their coffer in terms of how do we play the Bitcoin angle here? Because right now we are sliding into the 19K mark. Like we just saw under 19 this morning. And when you see where Bitcoin is right now, give me your thoughts on how the FOMC meeting on Wednesday plays out, what the forward-looking statements might really kind of go to, where you think that's going to slide. Because I've heard people kind of go both ways. We still see a little bit of anticipation. I think it was 20% likeliness of maybe getting 100 basis points. What are your thoughts right now? Do you feel like it's going to be the 75?
I do. I mean, I would be so shocked if it was 100. The Fed has been notorious for kind of guiding the market, and the market is telling us 75 is the likely outcome. In addition, I think one of the things that people are forgetting here is that the Fed has started QT in September, which is essentially another way that they're tightening. So even if they do 75 basis points with QT added into it, it's very much the equivalent of 100 basis points. So I think, again, the Fed at most is doing 75. I think they have to be so careful here, because if they, I mean, think about this. The rate hikes that we've seen already in this one, there's a delayed reaction in the economy. And what happens in 3 or 4 months from now when all of a sudden the economy comes crashing down? How does the Fed backtrack? So I think, again, 100 to me is off the table because of QT being in the mix too.
Yeah, if you look at the chart here, it's 80% right now on the 75 on the rate probabilities, and only 20% there on 100. And again, I think it was, and what most people have been listening to is, if you just go back and listen to Powell's statements from Wyoming, it was a little scary at that point. He was really in a very aggressive mode. Again, maybe that was a play for him to see if the markets would react. Obviously, that's something that the Fed is constantly kind of pushing to. If you look at Alf, Macro Alf, he does. We've had him on the show a couple of times. Now he's talked about, let me kind of zoom in on this one for you guys. He's talked about looking at historical recessions, and if you think about recessions and how this plays out, especially in crypto, his theory is that This one could kind of fall into the early 2000s, all the way maybe even a similarity to the 1940s. What are your thoughts on? Do you feel like this is going to be kind of a dine and dash type recession where we get a short term period, or is this something that you feel like is going to be a little bit more long term?
I'm in the longer term camp. And I think last time I was on it, we talked a little bit about the potential that we could actually see the market go sideways for 10 years, much like the .com collapse did until the NASDAQ took out its highs. And I think that's important to think about, because if you look at how has the market gotten out of every big drop in the last 10, 12, 15 years, right, and the answer is the Fed has printed us out. Well, now you take a situation where inflation, let's say, is at 4% or 5% in the next year. How does the Fed print us out of that? And I think I'd liken people to take a look at the Hang Seng chart, the Brazilian stock market chart. They had these massive runs around 2006, 2007, and those charts have gone sideways since then, and they have never taken out those highs. And I think that could be what we're looking at, mainly because, again, the Fed, by printing so much money, pulled forward a lot of that upside growth. And now we have to kind of pay for it by this longer consolidation digestion.
Yeah, his statement was it on average over this period of time that he looked at, the last decade or last century, it took 16.2 months to slow CPI from a peak down or back down to 2%. Do you think the 2% target is reality though? Or there's many people I talk to, they still feel that a 2% inflation is just not reality based on the world economic condition as it is today?
Yeah, I'm not in the camp that it's very realistic, at least not for a few years. And I think the biggest thing to keep in mind is that the wage pressures. So we've seen oil come down, we've seen a lot of commodities come crashing down. But the one thing that's not coming down is the rising wages. And maybe they're not going to continue to go up. But we've seen from this latest CPI is that even though oil had fallen a lot, it didn't get passed on to the consumer. And I would just remind people to think about, if you're paying your employees double, let's say from $15 to 30 or 20 to 40, you can't raise your product by double to compensate for that. So what you do is you raise it by 10% this year, 10% next year, and you kind of it takes some time to pass that hike along to the consumer. And I think that's going to make this inflation stickier around the 3, 4, 5% range for literally 4 to 5 years before it kind of fully gets digested into the system.
Yeah, and that's I kind of think you're right on with that point, because Kathy Wood kind of mentions the same thing about Larry Summers kind of leading the Biden administration astray, thinking that this is somewhat intractable, especially with what he's looking at, where they're kind of going at is that this could be like a 15-year push on where we could see the market really getting a full ejection. This is something too that, and I want to play a clip here from CZ. I think I've got it. Yeah, this clip here from CZ. He was being interviewed on, I think it was CNBC. CNBC, and he talked a little bit. Let me play this clip real quick.
Their supply didn't increase. And the number of people getting into this industry and the utility, the number of people who need to use those coins have increased. The demand have increased. But today, unfortunately, so in theory, if we go by supply demand, there's a very simple logic to derive from that. But today, many people trading cryptocurrencies are also in the stock market. So when the stock market tanks, people want to hold cash, and they also sell cryptocurrencies. So today, on the short time frame, it's kind of coupled. But in theory, they should be decoupled.
CZ, as we talk short.
All right, so his point right there is that he thinks that because of the supply and demand issue, especially now with ETH being a limited supply, and the adjustment of what we're seeing in the market, obviously already we've started to see this. If you follow, some of the ETH analysis sites that really kind of take a look at the burn ratios, etc. And CZ thinks that we may get a decoupling. So let's play this out for a second. I want to jump to Bitcoin with this very topic. If we get a decoupling because of supply and demand and more people in the market needing, especially if you look at Ethereum as the tool, how will this play out for Bitcoin if it fully decouples away from the traditional markets in this period of time, which could be a little bit of a flat or downturn in the overall financial markets? How do you think this plays out?
Yeah, so I think it's very positive for Bitcoin. And that's kind of one of the things I'm watching for of when that turn in the tide occurs for crypto overall is when we get into this scenario where inflation stays sticky higher, but the Fed can't kind of be printing us out of that mess. So I think that's where you're looking for that pivot point. I think it probably doesn't come till 2023 at some point, but that would be huge to me. And again, I think that Bitcoin has a ton of upside, and it's going to be the realization that people need the safe havens, that the government is still going to want to stimulate, which is going to be inflationary because the politicians want to get reelected every 4 years.
Right.
But the Fed maybe can't do what they were doing in terms of printing us out of this recession. So we get stuck in this kind of longer term recession. Inflation kind of holds around 4% for many, many years. And people say, okay, well, where can I put my money? Gold, maybe, and also Bitcoin and some of the cryptos.
Okay, so I'm in agreement with that. As I do believe that we will see a decoupling at some point. The shifts from the market. Obviously, we need a certain amount of adoption to come into the marketplace. That's the concern I have, Gareth, is that with pressures on the macro side of things, the global economic situation, is that we could suffer a scenario that we may not see as many new investors coming into the market. The one thing that makes me think that there's an opportunity, or at least a little bit of a hope, is that the new investors that are coming in their 20s and 30s, we know where they're kind of going. They're going into crypto, into these high risk assets, even on the stock market. So that's the good sign, because I do think that's where some of the growth will occur. I don't know that we're necessarily going to see it from the Gen Xers and the boomers as we kind of flay into what could be very uncertain times. I want to jump to your tweet here, and then if you can kind of show me this on your chart. It says, great merge, classic sell the news event, watching the keys at 19.5 level on Bitcoin. Is never confirmed below. Once it does, small support at around 17.5, and if that breaks, 12 to 13. Let's talk about that quickly on your charts, because I think this is something you are kind of painting out. Show me how this happens of where we could see Bitcoin in the 12 to 13, which we've talked about here on the show quite often, as this could be the new zone of purchase.
Yeah, so the big thing to recognize on Bitcoin here is that you basically have been hovering just above or just below the 2017 highs. So I'm going to bring up a trend line here, and we're going to go all the way back to those 2017 highs and put in this line here. And you can see that the market has just been hammering on this over and over again since June, so many times. Now, the kicker is, and you can see Bitcoin's actually come back amazingly well today, but what we saw yesterday was a close below. And what you look for here is a secondary close below the low of the first candle that closed below. And I know that sounds complex, but basically what needs to happen here is you're looking to see, does Bitcoin today close below the low of yesterday? If so, that's what we call confirmation of a breakdown. Now, if you look here, never happened. If we go over here, never happened, never happened, never happened. So for me, it's the difference maker between a confirmation signal telling us that it's a real breakdown versus a lot of games that algos play to stop people out. So you'll see a close below a level because then shorts pile on board and then people stop out of their long positions, and then the institutional algos rip it the other way. Once you confirm, that very rarely occurs. So I'm watching this like a hawk. Basically, do we close today above or below 19,400? And right now, it looks like a game time decision.
Yeah, I'm looking at it right now. It's setting at 19.3 right there. I'm on the daily with you. So, with that being the case, and of course, we're still seeing downward trend on sentiment. This is something we've been following over the weekend pretty heavily. I mean, this is a really kind of this could go either way right now. This is a really critical time for Bitcoin, especially in the short term. With that being the scenario, if we do see this fall below and we do get the confirmation, Gareth, where do you think the next stop is in terms of support levels?
So first level would be that 17.5 level from June, but that at this stage is only going to be somewhat on the minor side. And then I think you do see a continued down move to that 12 to 13,000 level. 12 to 13,000 will be very big support though. But again, it's interesting because you were mentioning sentiment continues to get more and more negative. When I hear that, it almost makes me think contrarian. I'm a big contrarian.
Yeah.
So it makes me wonder if, the negativity out there actually could create at least a short-term bounce before we flush down.
Yeah. Well, which is something we've talked about before a couple of times on how that kind of plays into the market. Because it is one of those scenarios that I think when you look at where Bitcoin has been reacting, we get these ebbs and flows of where sentiment, for the most part, over the past 6 months, we've started to see some good price indicators that have kind of shown out fairly well. Let's take a look at Ethereum, because obviously we saw some scenarios play into what Ethereum's whole buy the new, sell the merge date happened. And in fact, that is what really kind of went on. We saw Ethereum absolutely do nothing. In fact, really kind of underperformed. What are your thoughts of where Ethereum is standing right now?
Yeah, so Ethereum, we did see that kind of sell off after the merge right here. It has come down, but it's, in all fairness, it's still holding one of my key levels that I'm following, this 1250 level. And again, you got very, very close to it in the overnight before we reversed now. So basically, I would be looking for that level to hold. If that holds, you could see Ethereum start to push up. Here's a beautiful trend line where it's going to be. If we push up, you'll see resistance right there. If it gets through that, then you could be looking at the 200 moving average, which is basically right around this double top right here. I'm in the camp where you might bounce back to this trend line, but I do still think there's more downside to go in the near term or over the next couple weeks, at least retesting the double bottom here.
All right, so obviously this kind of goes in alignment with what you're talking about, Ethereum plunging after SEC chair says that the merge could make the crypto a security. If we get some kind of slow move toward a centralized look at Ethereum, do you think that really plays into the price narrative for Ethereum overall? Obviously, we would see some issues from a regulatory standpoint, but what are your thoughts on if Ethereum does get maybe looked at as a security?
Yeah, so in a weird way, and maybe this is from my stock background, but I'm not that worried about it. In fact, I actually kind of want it just to get it done with. Gary Gensler, get your butt in here, give us these rules, and let Ethereum figure it out. Because again, I mean, if we all want Bitcoin to hit up $500,000 or $1 million, the only way that's happening, you could say, I want so many people to adopt it around the world. Fine, but when you only have $10,000 or $1,000 in some of these other countries, it's going to be hard to drive Bitcoin or Ethereum up to crazy levels. What do you need? You need big institutional money. And big institutional money is not touching these things with a 10-foot pole until they figure out the rules. And think about what a security is. A security reports earnings, okay, but they have to file reporting. They have to abide by strict regulations. They can't do shady things. They get in trouble for that. I mean, is it really that bad? I mean, maybe it is, but at least it gives you clarity. And I think that's so important. So if Ethereum is a security, tell us. Let them figure it out. Let them file the proper paperwork, and then let's freaking buy it and watch it run up, because it's going to go when that happens.
Yeah, well, and I think to your point is that the strength of what Ethereum is doing now on true proof of stake, and how that kind of changes the whole dynamic around the ESG positioning, but also in the opportunity, just from the narrative of deflationary as a token. Obviously, that I think is going to be a huge opportunity. We had some of the guys on here from Bankless last week, and they really made some really good points of the fact that we could see Ethereum really at a very unique time in terms of what a great value this could be based on what the overall performance of this product or this particular token could do in the coming years, and maybe even in the coming months. I was looking at this a little further, and this goes into a couple of things here in this report that the White House did. They kind of talk a little bit more into some of the aspects of the Howey test, but also talking that in the journal that even Cardano and Solana were already listed in here on proof of stake. With that being the case, Gareth, you see any of these other tokens such as Cardano, Solana, other layer ones that could see some movement here with the advent of Ethereum kind of gaining the market confidence, I should say, if we actually see that occur? What are your thoughts on other altcoins kind of going in that direction?
Yeah, I mean, I think that with regulation and the clarity, I think you will see those coins probably move up as well. Again, the longer this kind of haziness goes on, the more these coins are going to get hampered. Again, it's the same thing as, like, if you have a drug company that we don't know if the FDA is going to approve the drug or not, or this or that, investors just don't want to take that risk. And so you get some clarity on it. The FDA approves the drug. Now you can buy it. It's going to be a home run down the line. I think that's what Ethereum has done here with the merge. It's just we need this clarity, and I think these other coins can do very, very well as well, assuming they keep up to date on their technology, right? That's my only fear about certain things like Solana and Avalanche and others, is that they have to maintain that superiority and speed, and if others come along, they could get bumped down the list in terms of crypto market cap.
Yeah. Gareth, I want to show you the institutional crypto products here. This was a 2022 recap here in August. And you can kind of look at the number of opportunities here for institutional to make its way into crypto. Do you feel like these, when you look at the worldwide spectrum and you see what's happening in obviously places like Switzerland and many other countries that have kind of gone in this direction, Canada's of course all on this list as well. With that being the case, do you feel like once we do start to see a little bit of the movement here in the United States and an opportunity from possibly an ETF or others, will we start to see that kind of adoption really kind of go in this direction? Or could these other regions, especially from the aspect of maybe we get the SEC that has some clarity, the XRP case gets settled, maybe we're post the midterms, we start to see a little bit of direction and maybe a bottom. Do you think that institutional could start to play a role, from a global aspect when it comes to Bitcoin and Ethereum?
Yeah, I definitely do, right? So I think that, number one, we get through the midterms. I think that's when this framework's going to be released. So I'm kind of looking at that late November, early December period when we'll start to get some clarity on that. And I do think other countries will follow suit, right? I mean, the SEC is kind of looked at as being the golden goose of regulation, and everyone else will follow that. And I think the same thing with ETFs. I mean, there's a reason why we haven't seen the approval of a Bitcoin ETF yet. It's because the SEC hasn't approved it based on the fact that there's too many gray areas for these cryptocurrencies. So look for that to happen as well. I mean, I think this is the kind of the exciting thing for me with crypto, is that once we get the regulation, I think the dominoes start to fall, and you actually could get a significant bottom in, at that point in cryptocurrency when you have this kind of clarity.
Yeah. I'm just looking at this list. This is insane how many offerings there are for institutional plays right now. And obviously all in a situation that is really kind of moving. And, look at XBT on the inside of this, and 21 shares, you got 3IQ in here, CI Galaxy, CoinShares, of course. Lots of interesting, because this gets into, I think it gets into a position, because this is one of the things you and I have talked about often, is all it takes is a little bit of pressure from the institutional players to really start to move the market in a very, very big way, which could be the other aspect of this in terms of where we will see adoption, could be coming obviously from the institutional players as well. You also look at, this is a tweet coming over from Robert Kiyosaki. He's a little bit controversial because, he kind of says US dollar is dying. Bitcoin, silver, and gold are the big ones right here. And he thinks this is finally the time. He's been talking about it for about a year, is that we're in a position right now where the market is in super distress. Question here, of course, is whether it's going to be a 12 or 13K bottom, or if we're going to see a 15K as the new bottom, whatever that might be. What are your positions when it comes to Bitcoin, Ethereum, gold, silver? How do you look at those commodities compared to what we might see in the digital side?
So I think with gold, at least, gold is still in that process of putting in a significant bottom in terms of dollars. I think the important thing to recognize is that with gold, if you're looking at it in terms of euro or yen, it's actually been a great outperformer this year because it's traded here in terms of US dollars. It's down a little bit on the year, but again, with the dollar up 15% on the year, Gold has
Right.
actually performed really well, only down 5-6% on the year. So I continue to be a huge fan of gold. I think it's another way to kind of play the movement away from the fiat currency kind of side of things, with the safety of these risk assets getting pummeled by the Federal Reserve. So I think that's a great play. I also think that eventually, like we said, Bitcoin is going to start becoming that more and more digital gold. It's not going to behave like a risk asset. It's still a little way from that maturity point, but I think it will absolutely do that.
On that point, Gareth, this is a chart that shows the top 50 coins, liquid staking solutions for Ethereum. This was Lido, etc., were the highest performing. This is at 224%. Last 90 days. This is followed by Chili's. We've talked about them. A lot of these are altcoins that I know you don't follow as much, but the point that I'm making here, let me kind of zoom in on this chart real quick, is that a Bitcoin over the last 90 days has had a negative 6.6%. That's right there. And then you start to flow into the green, and you're getting into everything from Litecoin to Algorand, Avalanche, Link, XRP, Aave, Uni. I mean, these are all altcoins that have performed quite well over the last 90 days. And many people would look at that and say, this is one of the key indicators that we're in altcoin season. Now, with that being the case, you get derivatives off of what's happening with ETH, where the markets could be going, people looking for other asset or other aspect of other assets to kind of get their gains from. Do you think this is just something that nothing to see here, or do you feel like there might be some moves here when it comes to a lot of the altcoins that we're seeing right now?
The only thing I would be a little cautious about is that how many of these altcoins were moving in tandem with Ethereum over the last 90 days going into the merge, right? So the question is, if Ethereum starts to kind of wind down and continue down, do these start to underperform, and maybe the other coins like Bitcoin start to outperform and kind of readjust? Right. So that would be my only concern, I think, with that performance. I wouldn't necessarily jump to that conclusion of, it's a new altcoin season type thing.
Yeah. All right. I'm kind of on the fence with you on that one. I look at altcoins. Of course, most of the cases I'm looking at projects that don't necessarily have a direct relationship to Ethereum, even though they might be an ERC20 token. But I'm looking more, because in many cases, the altcoins have somewhat decoupled a little, at least in comparison to what's happening in the traditional markets. Sure, they kind of go in line to a certain extent with what's happening with Bitcoin and Ethereum, but in some cases they do start to break away. Examples we've seen, on Near Protocol, Atom, even Helium, we saw make a run and then get smashed for its new SIP proposal towards Solana. But a lot of that being the case, we're still looking at Bitcoin pretty much as the alpha dog and the play out throughout the end of the year. This article is simply saying, crypto trading expert says Bitcoin bottom to occur in Q4. This sounds very familiar right now, because this is something we've been talking about. Do you think Q4 is the quarter, or do you think this rolls into Q1? Because I've always been Q3, Q4 that this might be our new bottom, but I'm feeling a lot more heat right now just because of the pressures we're seeing from inflation and the continued number ranging. What are your thoughts?
Yeah, I'm in the camp that it's probably late Q4 or Q1 of 2023 in terms of the bottom. And the main reason there is that, I don't think Bitcoin is ready, or the rest of the coins, to really shrug off risk assets. And I still think that you're going to see the economy slip into a recession. The market is going to, or investors are going to worry that we can't get out of that recession without the Fed printing, which they won't do until it gets really, really bad. And that's going to cause a sell-off in stocks and really draw down. And then I think, unfortunately, that just draws down cryptocurrency as well. So again, there's going to be two pivot points, right? One is where it decouples, where crypto decouples, Bitcoin decouples, or the other one would be when the stock market finally bottoms, then you get a bottom. And again, I just don't see the stock market bottoming until 2023.
Yeah, I'm with you on that. I want to jump back to the chart real quick. I'm on the 4-hour here right now, Gareth. This is an area of sentiment that we've been watching pretty closely when it dipped in here. The last one we looked at was right here, which it came into. When you see, because this is on the 4-hour, right now we've got almost 12 hours of print, but we also have about 12 hours prior to that on the red candles. If we go back into the daily real quick, you can kind of see that we're getting a little bit of a green candle. This may be that scenario you're talking about where it doesn't confirm. If that is in fact does hold like this for the rest of the day before we see the close, do you feel like we could see a small pump before we see a push down?
I do. I think that investors are now dealing with the Fed coming up on Wednesday, and everyone's kind of figuring that out. I think we're just noticing. I just brought up the 4-hour chart of the U.S. dollar, the DXY, and we've seen these little red candles, right? So basically here, I'll show it to you guys. So basically, here's your 4-hour dollar chart, and look, red, red, red. And then if you look at the 4-hour Bitcoin chart, you can actually see green, 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 right? So you have that inverse relationship going on. And so that's what the key is. I mean, as crazy as it is, I mean, everyone wants to say, oh, crypto is totally, you know, who cares about anything else? But the bottom line is, it's trading with the US or inverse to the US dollar. And if we can get any sort of slight, I mean, I just mean like a hair from the Fed, just throw us a bone, Jerome Powell. If he does, then you see crypto fake out all these people that are too bearish, and you'll actually see a pop probably to like 23, 24,000.
Yeah, which this could be the scenario. Of course, I think everybody's going to be waiting on bated breath on Wednesday for the post announcement conference, which is usually when we get a lot of the Q&A from the reporters and such, and that's typically when Powell breaks down some of the things. I'm always looking for some mistakes that he might make in his commentary, because he usually is pretty loose and from the hip, so it's going to be an interesting one to watch for sure. Last point to you, Gareth, when you are playing these out in these kind of scenarios, many cases for some of our audience. But by the way, guys, make sure and hit the like button, because I know you guys appreciate Gareth coming on the show. If this is the series you like for us to continue, we want to make sure that we're giving you guys the right kind of alpha. And don't forget, put in some questions over here. We'll get to some of those. But Gareth, back to the point of when you play these out, in some cases, these are somewhat swing trades. Some people come in, maybe you do a short or a long scenario like this. All of this playing out, let's timeline this through the month of September and into October. So if I'm looking at October, I'm trying to get this 45-day range right now, because now we're talking about October, November, December. That'll be at the beginning of Q3. We'll have Q4, and we'll have the Q3 numbers coming in from Wall Street. So most of the earnings will come back. We'll start to see that. We'll see jobs numbers, real estate numbers, all those kind of things. What is your thoughts over the next 45 days right now?
So I think the markets could be due for a very near-term bounce, maybe around the Fed decision and what we see from them, maybe them talking down like, okay, that was our last 75 basis point hike, maybe still 50, but the market just needs that bone from Jerome Powell to know that we're on the downward slope now. But ultimately, I think that you're going to start to see the market, we're going to start to head towards recession. I think the next jobs number is going to show more and more weakness. And you couple that weakness in the jobs numbers with a Fed that's already starting to kind of bring the hikes down, and the markets are going to start to say, uh-oh, what's going on here? So in the next 45 days, I think you get some bounces, but I actually think we test the June lows.
All right, so that goes back to that bloody September approach that some people look at. So there's an opportunity there. But to your point, possibly more of a downtrend here. Remember, October is a month that they don't do an FOMC meeting. So we won't see the next one till November. Maybe there's some loosening in there. This is going to be an interesting 45 days for sure, because you're going to have the end of Q3. Most likely you're going to start to see some indicators coming from Wall Street on how the year is going for many of the big performers, and then playing that into the market, kind of leading into that Q4. Granted, we're starting to also see a total, I was looking at this the other day, the number of countries that are reporting on their interest rate reserves and hikes are all happening this week. It's like within a day or two of each other. So many indicators that really could kind of push to that. I want to jump to some questions, but I think we have a poll real quick here, Gareth. Let's take a look at this one. All right, here we go. Oh, you always love these polls. What are you eyeing to buy more of? Bitcoin, Ethereum, 46%, or altcoins? People are going for the alts. So I know which way that means for you, Gareth.
Well, just because of the safety of Bitcoin and Ethereum, like, if I'm putting any significant capital to work, I gotta play it a little safer.
I love it. All right, so we got a few questions in here. And Peter, we've talked about Chili's before, Peter, and we've done some analysis on it. You guys have probably seen it. where we've kind of been talking about it quite some time. We've got Chris coming in saying, Gareth just pumped the Meta price. Love that. Jerry Crosby comes in and says, is 14K possible before year end, before end of year? And he's talking about Bitcoin.
So 14,000 before year end. Yes, I actually think it will happen before year end.
Interesting. Okay. Stacy Wood coming in here. Where's the best place to stake 32 ETH? Not technical, security, economics, top of mind. You know, when Stacy, we're looking into a lot of this right now. Some of the things that, if you're looking at running a validator, and we've talked about this before, the ones we're researching right now are things like Rocket Pool, all nodes, some of those kind of scenarios. If you're looking at just pure staking, you want to look at centralized exchanges. Binance is kind of one of the best places right now that I've seen in terms of what they're paying, and not too much in terms of locking you up. So that's another factor. But remember, as you guys know, I'm all about holding your own keys, holding your own coin. I like self-custody. Jerry comes in. What about XRP? We're gonna try to get the XRP leader of the Free Nation on the show this week, and that is John Deaton. So I think he's coming on the show tomorrow. So make sure, ask Gareth about XRP. What do you think about Gareth about XRP? What do you think?
So XRP is super interesting right now, and I'm going to show you guys this chart. So you have this massive, massive wedge pattern going back to early 2021. And what basically a wedge pattern is, it's all it is choppy sideways action. But the key is on this is that whichever way it breaks, you expect a major move in that direction. So if it breaks to the upside, it should be a big move up. If it breaks to the downside, you could be looking at a big move down. And basically the wedge pattern is coming to a head. So what that tells me is that the judge's decision here is probably coming out by the time this gets to a head. So I would say at any point between now and early October, you're going to get some news on XRP. Which way is it going to go? I honestly don't know. Wedge patterns don't tell you with great accuracy, but whichever way it breaks, look for a significant move in that direction.
We're going to be doing a breakdown on Cardano because we've got the Vasil upgrade coming as well. So we will give you guys a breakdown on that one this week. We're going to have a big show on that one. Michael Keys coming in. What do you all think of Polygon becoming more involved in companies like Starbucks? So we did a full breakdown on that issue. Actually did a full video of it. I think it's a good thing. Gareth, what do you think about Polygon? It's a great layer 2. We're a big proponent of, full disclosure, I am invested in Polygon. I like the token.
Yeah, so for me, again, I just look at it more on a chart basis, but I will say this, is that you see a lot of cryptos that have retraced back down here, and Polygon has held up beautifully. So you could even make a case that this is a classic cup and handle pattern, right? You know, see like this,
I see it,
like that, and then here's your beautiful handle. And so honestly, the chart looks very, very good. I mean, if I had to choose one, this is probably the one to go with in terms of the potential upside off a good chart pattern setup.
Yeah, I think the point with Polygon right now, its relationship to ETH, what it's doing in terms of its partnerships. We've talked about this many times. You've got, you know, them being involved with Disney and their kind of their incubator. You've got this movement heavily into retail with Starbucks. If that comes off, that's a bigger play that I think a lot of people completely realize, because that's a framework for loyalty and reward systems, which is completely outside of the crypto ecosystem. But Polygon as a whole will gain just because of the fact that it's the platform that's essentially initiating that. So there's a lot happening there for sure. David King coming in. Do you think we'll see another metaverse pump in October? You know, October 11th is the date to watch with Meta. What happens on that date, along with how Meta's forward-looking statements are, because they'll give some forward-looking statements to give us some indicators on how they can kind of correct. But here's the other thing that I want you guys to be thinking about, and we'll probably cover this in another topic, is with the pressure that we're seeing right now from Congress putting on to Twitter with their whistleblower, and then also onto TikTok, kind of the last man standing is Meta. And Meta could actually end up in a very interesting position, which is, that's another topic we should talk about on another show for sure. All right, so here's the last couple of questions here, Gareth. Vasil and ADA sell on the news. I think in most cases, that's kind of what I do, is any kind of scenario that has been leading up to this for so long. is I typically look a sell the news kind of scenario. What are your thoughts on that one?
Yeah, so I basically follow the price action going into the news, right? So on Ethereum, we had rallied well off of the lows. It dictates, usually you'll see kind of this, okay, it's over, I've made money, let me take profits. So if that ends up happening, then look to exit on that run up. If it were to sell into the news, then usually it's lowering the bar of expectation, and you can see the pop afterwards.
Yeah, and I'm trying to pull up the ADA chart. I can't quite get it here, but we'll definitely give you guys a full run on this as we go into later in the week when we start talking a little bit more about Cardano and what's happening out there. Gareth, always fun to talk with you, always an insight, and we have a blast when we do this. So thanks again for stopping in. We appreciate it.
Always my pleasure, Paul. Thank you for having me.
You bet. All right, so you guys are tuned in over on the podcast side of things right now. Best thing is to jump over here to the YouTube channel. Make sure and hit subscribe. That's the number one thing that you can do for the channel. It helps us, one, create content for you just like this, along with other content that we do across our Diamond Circle, our mastermind group. We do have a new show coming out. We'll be breaking down more long-term and longer-looking evergreen type topics. And these are more macro-driven, how the political scene may be playing into this. We'll talk about that coming up soon. Again, if you guys are not in the Diamond Circle, get in because it's really easy and it's free. So just jump in and send you a couple of emails each week. And it's a good way to stay engaged with the channel. When I know everybody's busy these days, you don't have a time to always jump in. Obviously, hit the bell because that's going to give you notifications. At least it'll pop up on your phone when we are live and you'll get a chance to catch all this great alpha like what we do here with Gareth. Make sure and tune in tomorrow. We're going to be doing an early show with John Deaton talking about XRP and how this plays out in the near term. So don't miss that one. If you guys want to reach me, it is out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.